Unit 4, Chapter 14, The Trial Balance. The court is in session and ledger accounts are on trial. The attorneys are arguing about the arithmetical accuracy of accounts presented. Who will win and who will lose? In this unit, we will seek to test the arithmetical accuracy of all ledger accounts. The trial balance is step 5 in the accounting cycle. It is prepared in the general journal. The trial balance is extracted after all ledger accounts have been prepared in the sales ledger, purchases ledger, and general ledger. It ensures that all ledger accounts are accurate before preparing final accounts and the balance sheet. Further, it prevents wasting time in the preparation of final accounts to arrive at inaccurate results, as well as a balance sheet that will not be able to balance. Since the double entry is complete, all entries are transferred from 1. Debit side of the ledgers to the debit side of the trial balance, and 2. From the credit side of the ledgers to the credit side of the trial balance. Explaining debits and credits in the trial balance. How do you decide whether an account is debited or credited so that it can be entered on the debit or credit side of the trial balance? Let me show you 2 examples. The first is the capital account. At this point, the capital account is incomplete because net profit or loss has not been ascertained. Now, let us treat the account as though it were complete. The credit side shows a total of $25,000, while the debit shows drawings of $800. To balance the capital account, you will first need to enter the credit total, or $25,000, on the debit side. Then, minus $800 from $25,000 to arrive at the balance of $24,200 on December 31st. This amount is brought down on the credit side. 2003 January 1 balance brought down $24,200. It is this amount that is transferred from the credit side of the capital account to the credit side of the trial balance. The second example is expense accounts. Looking at the insurance account, let us replace the statement "Transfer to profit and loss account" with "Balance carried down." Then, the balance brought down is placed on the debit side. This means that the trial balance will also be debited. Remember, in the trial balance, debits must be equal to credits before profit or loss can be ascertained. An important principle to note is that the debit side includes all assets and expenses such as rent, insurance, wages, purchases, returns inwards, and discounts allowed. The credit side includes all capital, liabilities, and income such as sales, returns outwards, and discounts received. When extracting a trial balance, students tend to leave out 2 or more accounts in error. To prevent this problem, it is a good practice to follow this suggested presentation of the trial balance. You can start with the capital, fixed assets, current assets, followed by current liabilities, long-term liabilities, goods accounts, revenue income accounts, and revenue expenditure accounts. Here is CTATE's trial balance. Notice all assets and expenses are debited, while the capital, liabilities, and income are credited. Remember, the 7 accounts that are credits in the trial balance are capital, creditors, and this includes both the trade and the sundry creditors, bank loan, sales, returns outwards, and discount received. 6 so far. The 7th credit is bank overdraft, which was not given in this example. I must tell you that it is an excellent idea for you to learn these 7 accounts that are entered on the credit side of the trial balance. Of course, all other accounts are entered on the debit side of the trial balance. Now is the best time to test your understanding with the 3 exercises on page 147, which continue from previous chapters.